Welcome to this Stockbox interview with the CEO of Red Rock Resources, Andrew Bell. Hi, Andrew.
Hi,
How are you?
I'm very well.
Okay, good. So the company released an RNS titled Summary of Key Projects, where you sort of do a review of the last 6 months. Why do you feel it's important to make this announcement?
Well, we've been telling people about our investments in Jupiter Mines, and people probably know that we're invested in Power Metal Resources, and they probably know that we have our gold royalty in Colombia, and they probably know that we have an iron ore royalty in Australia. And we wanted to focus people's attention on what we think are our three key projects. And so that's what this announcement does, because these are the three things that we expect to be coming out with a lot more news on, each of those three, over the next months.
Okay, so on Kenya, let's take Kenya first. This is a legacy asset. What's developed there?
As you say, we've had it for about 10 years. And we initially did a lot of work and we got a JORC resource, 1.2 million ounces. Then politics intruded. And to cut a long story short, we had to go to court. We spent a lot of time there. When it came out of that, there was an understanding, an agreement that we would get it back. But the wheels of administration turn very slowly, particularly when there are elections in between and changes of ministerial personnel every now and then. So it's actually taken us until, I think, this August actually to get those licenses back. And so that's a key development in Kenya. It means we can start exploring there again. And we've hit the ground running. We have the camp is being made ready for occupation so that we can get geologists in there and start doing exploration before the end of the year.
Okay, and Australia, your joint venture with Power Metal Resources. We've spoken a lot before about this, and you're always very bullish on this project. What's the latest there?
Well, the latest is we want to get our licenses granted, of course, as quickly as possible. We can't travel to Australia. They can't travel to us. We have recruited an exploration manager there. To give ourselves a local presence, we've now opened an office there and are going to have a website that's an Australian website that people can go to. And we're going to use local people to push this very fast now. So that's one part of what we're doing. The other part, of course, is we've got the 43101 report on our 2,100 plus square kilometers of land holdings. And this is an essential step towards getting a listing on the Canadian market, which is our plan. And of course, we haven't just been doing that, getting the 43101 with the idea of listing. We've also been showing it and showing our other tenements there to companies that have expressed an interest in perhaps making an offer for some or all of our tenements there. So, I mean, I can tell you because I don't think it would be much of a secret. Of course, we are getting offers for parts of our holdings and interest, I'd say offer even for whole of our holdings. These offers may not be at attractive levels, but they're certainly at levels that would be very good for the share price of both companies. So, okay. We've created that business during lockdown. We got in just in time. We were very strategic. We got a lot of ground around Ballarat, one of the two great mining centres that had been previously mined, and that was obviously good because you'd expect to be able to find more gold there where the existing mines are. But we also went and got some geological targets based on major structures that we thought potentially controlled the mineralization in the zone to the east, the Melbourne zone, which arguably those younger rocks and the younger mineralization, I should say, that's created there, it could be one of the controls important for Fosterville and some of the discoveries in that direction, like Costerfields. So when we pegged that area, people wondered what we were doing, but structurally, geologically, it's very interesting. Our geophysics has really confirmed our judgment there. And now Mawson, Canadian company, has just been drilling there and got 15 meters at over 3 grams announced just in the last few days. just nearby. So now everybody can see we've got a big land package there, which is really attractive. So we've got a mixture of pure geological targets and then targets which are based on previous mining. So we've built up a fantastic portfolio, I think, that is really, it's certainly listable quality in Canada. We're working on that. And so that's the second asset. So we've dealt with so far Kenya, Congo, and Kenya, Australia, and probably you're going to ask me about Congo as well.
Yes, the DRC, yes. So your copper and cobalt project, are you feeling equally as confident?
Yes, I mean, cobalt has a cloud over it because, just as the world, meaning the West, took one look at platinum and said, Russia, Zimbabwe, the area that's heavily unionized and rather radical around Johannesburg. Not very stable. We're not comfortable with that. And so palladium has really come up and performed very well. It is taking the place of platinum. In the same way, the Congolese thought they were the Saudi Arabia of cobalt, and so they were, but they overplayed their hand because rather than do good deals, they did dodgy deals with Chinese companies. So now you look at cobalt and it looks like China, Congo. And so what has the West done? I mean, led by Tesla. Tesla has developed and is going to be using cobalt-free electric batteries. Mm-hmm. And so where Tesla leads, others will follow. So I think cobalt has lost its opportunity to be the go-to for electric batteries because of political reasons, which were eminently foreseeable and that we actually foresaw. So our focus, although we have cobalt, it's a byproduct, a valuable one, our focus has been on getting really good copper assets in Congo. And we have 2 joint ventures, I think maybe about to do a third. And the quality of some of the assets in them is quite extraordinary. But the first of these, the local party that we were in joint venture with, had some internal family problems and a fight. And this impacted our ability to progress rapidly there. So we had to work diplomatically and with them to make sure that it all worked out well. Because at one point, the only thing the different factions seemed to be agreed on there is they were going to try and grab one of these assets from us, even though we were the ones who chose them. So we solved all of that. It's taken time. I'm afraid there's been nothing announceable because things have been up in the air, and we would have actually made the situation worse by exposing, sort of internal problems in our partner to sort of public gaze. So we were discreet. We allowed ourselves to concentrate on other things, not difficult because the copper price was coming down a bit and the cobalt price was coming right down. So we thought, okay, we play a long game, just as we played a long game in Kenya, but now everything is coming right, has come right. We sorted it all out. And it really helps, by the way, that we do operate there in French, and I speak French and so on, because I don't understand how these Australian and other companies that go to the Congo can remotely imagine that they can operate without being francophone. And we are in a position where we're going to be able to open a local office. We're going to be starting exploration. Let's say we're going to do some geophysics straight away on our other little joint venture. But the big ones are going to be absolutely massive and will offer the potential to do deals with large companies. And I can't say much more than that because in the one case, we have a non-JORC resource that we need to bring up to JORC before we can start talking about it. And in the other case, we have something that is just in process of finalization, and there's a completely new project, but is adjacent to a big mine. So we have created, I think, the best non-major portfolio of assets in Congo. And as long as we can hold on to that and mold it and announce it, we're going to have something very valuable there. I think that if we were a recognized, well-known company with those assets, they would be worth, you know, hundreds of millions just holding them. Now, the issue, as I said at the beginning, some of our things are in process of becoming. We haven't actually crystallized that value, solidified it yet, and it's still premature to talk about that. But with the things we're putting in place now, the agreements we're registering, so on, we're getting to that position where we will be able to speak with confidence. If we start talking about the value before the last thing is registered, the last I dotted, the last T crossed, somehow magically these things will start to be taken away from us, because unlike English law, which treats as done those things which we ought to have done under the equitable jurisdiction, the civil law-based systems, until something has got registered with all the right stamps on it, it's almost as if it had never existed. And that can be something that is exploited by unscrupulous people. So we are at a very interesting stage in Congo.
Okay. And there was also the other project, the new project in Slovakia, the gold project. You've put this to one side for now, have you?
Because if you look at the scale of Congo, if you look at the scale of Kenya, where we have 1.2 million ounces, but should be able to raise that, there's no reason we think why we wouldn't be able to have a target of several million ounces there. And if you look at the scale of what we can do in Australia, then Slovakia becomes a rounding error. Probably the reason why we were looking at it is we thought Congo is a bit up in the air. If we have a disappointment there, we have to, triangulate, we have to insure. One piece of insurance was to try to get another good asset there in our own name, which looks as if it is probably happening. The other thing was to try and get a project somewhere else. But once you know that you've succeeded in your main thrust, then you focus, you concentrate. In the same way a year or two ago, or any time perhaps up to this summer, when we were not sure whether at the very last moment something was going to go wrong in Kenya, we were always looking, what else can we have in case that doesn't work? Because you don't want to be one day announcing to the market that you're naked. But we're now in a very good position because we have three things that are actually real.
Okay, and finally, Andrew, you mentioned in the RNS, you articulate very clearly that red rock looks cheap, and even more so now given the progress that you've made. Why do you think that is, and what are you going to do about it?
Well, different people have different perceptions of cheap. One man would say this is cheap because it has huge potential. Another man would look at the same thing and say, this isn't so cheap because it still requires a bit of work to solidify that potential. This is still in the situation where if, say, Andrew walked out of the door tomorrow, that value could disappear. And you want to get it to a position where if Andrew went under the proverbial number 11, the value would be there. And that's what we call sort of solid value. And it's quite rare on AIM. I mean, in many cases, it doesn't exist. We talk about value, but the value is associated with the history of exploration and development by that particular management of that particular asset. And it's an immature stage. Now, and then you have value or cheap when something has got to a stable state and you can start talking about going and doing a deal with the major or getting a farm in, or you can attribute real card value to it. And that's a different stage because, as we know, every mining project has a value of either zero, if it's not going to make a mine, or something. And we're spending a lot of time with assets which are in between because we don't know which way they're going to break. But ultimately, it's binary. It's mine or not mine, profit or not profit. Then there's a third situation, which is where you have liquid assets that you can actually sell, like listed shares and so on. And you look at them and you can say, well, it's very cheap to them. Now, we have tried to have, of those three kinds of asset. We've tried to have a bit of a mix, but obviously trying to move towards having solid assets that can't be taken away from us, that we can are good enough that we can go and do deals with other people, but as a backstop, as inner reserves, some liquid marketable assets to ensure that no matter what market conditions, we are not going to be forced to do a large fundraise at a time when the price is very low, because we've seen how that wipes out a lot of AIM companies. But at the moment, we've got a following wind. We've got a strong commodity market. We're in commodities that are looking extremely good, gold and copper. And we have, we think, some really first rate and some really promising assets. So the next few months are going to be very positive, we think.
Great. Okay. Well, Andrew Bell, the CEO of Red Rock Resources, thank you very much for talking to us.
Thank you.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.